All right, so here's day 12 of my journey to a $500,000 stock market portfolio. So what did I do today, Friday, August 23rd? So sadly, the first thing I had to do was take a loss on my Netflix put credit spread. I needed Netflix to be above 310 come August 23rd. Obviously it wasn't, especially with the markets crashing after the whole China issue. So I had to close the put credit spread for maximum loss, and I didn't feel like rolling it over. I don't want to deal with Netflix anymore or this trade anymore, especially since I don't know when exactly it's going to come back up. And rolling it over doesn't necessarily give me a credit. So it's just adding on more risk every time I roll over the trade. So I just close it out, and from now on I'm gonna be mostly doing credit spreads on ETFs. I'm going to try to stay away from stocks unless it's something really obvious, like the put credit spread I put on Tesla, although it dropped hard today, but it has nothing to do with Tesla. It's because of the general market. So I had to close Netflix for a $1,000 loss, but I bought Nvidia today. So as you can see here, cover call trade expiring September 20th, 155 strike. So the 155 is my maximum price. As long as Nvidia is trading above 155 come September 20th, that's my maximum selling price. But it only cost me 150.88 to get into the trade. So my profit is the difference. So it's about $4 and change. But what I'm looking for, of course, is the return, the percentage in 4 weeks. So it's about a return of 155 divided by 150.88. So it's a 2.7% return in 4 weeks. So an annualized return of 35%. So you can see here, I bought it for $163.75, but I collected a premium right away of 12.87. So my cost is 150.88 and my maximum selling price is 155. As long as Nvidia is trading above 155 come September 20th. If it isn't, I keep the shares and I can sell another call option like I did the previous month. So that's about so right now my maximum profit on Nvidia is $400, and that'll be confirmed around September 20th. If Nvidia goes back up hard, I can actually close the trade early for a profit, maybe for a $300 profit. Oh, I forgot to look at the balances like I normally do at the beginning of the video. So yes, sadly, my margin account dropped to 1,730. Well, it had a high at some point of $12,000. Quite sad. All right, so 1730 in my margin. How much in my TFSA? 41,871. Well, the start of the day, I think it was over 43,000. And the RSP finally, sadly, 16,595. 16,595. So now I'm back down to 60,196. Looks like reaching $500,000 is gonna take some time. I also closed an iron condor I had on the SPY. I had two iron condors actually, one expiring August 26 and another one expiring August 28. And I needed the SPY to be above 290 for one of them and 292 for the other. Now, I closed it early for a small loss because I didn't want to take the risk and wait next week, because I know the markets are unpredictable. And it's a good thing I did close it for a small loss because the SPY is right now trading at around 284. So I'm happy I sold it early, closed it early for a loss, a small loss. It could have been a much bigger loss if I kept it. But then I sold a new iron condor for 30 days out, expiring September 23rd. And I picked strikes of 275 and 300. So basically I make my max profit. So in this case, my max profit on this iron condor is so $65 minus 18 plus 288 minus 205. So yeah, so my max profit is $130 as long as the SPY stays below 300 but above 275 come September 23rd. But of course, I'm not going to wait until September 23rd. As soon as this trade starts to be profitable, for example, if I can close it for $60 or $65, I'll close it early. And that could happen if time goes by and the SPY is still trading between 305, between 300 and 275. I think a better trade would have been to just sell the put credit spread, because usually when something goes down hard, it usually recovers, it usually goes back up slowly, which has been happening since the past 3 weeks. Whenever the market dropped hard, it goes back up again. So a put credit spread would have been smarter because I could have closed it out earlier. But now if the market goes back up, I become profitable on the put side, but my call side becomes not profitable. So I won't be able to close them out at the same time because they'll basically cancel each other out. The only way the whole iron condor becomes profitable is really if time goes by and the SPY is really trading horizontally or right in the middle. So my Tesla put credit spread, remember I collected $100. If I wanted to close it today, it would be around $175, $150, somewhere in between 95 and 225. So normally my new strategy is to close losing trades as soon as the amount of premium is double the amount I collected. I don't want to go to max loss and lose $500. I'll just lose, if I collected $100, when the amount of premium goes to 200, I'll close it out for 200. My loss will be 100. But in this case, so this happened in this case, but because I feel like I still have time in the trade, so I'm still making sort of an assumption. I still have time in the trade. It's almost 30 days or 29 days left. And I know this is just, this correction is just, or this drop in the market is just temporary. So there's a good chance that it stays above 200, that it comes back up again. I don't think it'll stay below 200 until September 20th. So I'm not going to close it early just because of that reason. I'll hold on to it. Also, this thing with China, I mean, how many times is the market going to get impacted by any news related to the tariffs? I mean, maybe the fact that there's uncertainty, that's what creates the drop in the market. But if we can just finally create certainty about it, and even if there are tariffs, just the fact that there's no more uncertainty, maybe that will stop the market from crashing every time. Even if it's bad news, but let's just confirm the bad news, and then the market absorbs the bad news, and then we're done with this bad news so that it doesn't keep dropping every time. So hopefully this is the max that it could reach after confirming the tariffs. We'll see. Good news is Weight Watchers is dropping. I want it to drop to 25. I need it to drop to 25. So I'll be watching this closely. I sold a call option on Uber. I didn't collect much, but I wanted to get something or before I get nothing. So I went till October 4th, but I kept the 40 strike because I don't want to sell below my initial cost like I did with Weight Watchers. I sticked with the 40 strike, but I went a little bit further out, collected $25, not much. But I mean, if you average what I collected the first time, which was $200 plus this $25, it's not a bad return. It's an average of 2% per month, which I'm very happy with. Same thing with American Airlines, collected $11, very weak. After commissions, it's like $5 left. I could see it as a very small dividend, but it's better than nothing. And I'll sleep better if I pick a strike price that's closer to my cost. Now on Monday, if the market is still down or drops some more, I'm thinking of a few options. I'm not sure yet what I'm going to do, but one of them is definitely AMD. I mean, trading at 29.38, I could definitely do a covered call on AMD. If I go to September 20th on AMD, I could choose a 28 strike, so I could give myself so much downside protection. I could go to a 28 strike, and it would only cost me 26.8 to buy the stock. If AMD stays above 28 come September 20th, I make a profit of the difference of 28 and 26.83. But if we look at the percentage, which is what I care about, so 28 divided by 26.8, that's a 4.4% in 4 weeks. That's perfect. Not only that, but I'm also sort of guaranteeing it by giving myself a downside protection of the difference between 29.38 and 28. So 29.38 divided by 28. So I'm giving myself 5% downside protection to guarantee myself a 4.4% return in 4 weeks. So AMD could drop 5% and I still get my 4.4% profit. That's amazing. I could stick to a 29 strike and I'll collect a higher return, but I'm not giving myself that much downside protection. But since AMD already dropped, I could assume that it's not going to drop any more than that. So if I stick with the 29 strike, I could collect about 5.8% in 4 weeks, which annualized is 75% per year. What's also cool with covered calls is I can actually go a year out. So let's say I go to June 2020. I could pick a strike of 30, and my max profit is the difference between 30 and 24, for example. So my max profit is $600. $600 divided by 2,400, that's a profit of 25% in 1 year. So I can get my 25% return or profit upfront. I get it upfront, and then I get my capital back after a year, as long as AMD is trading above 30 after a year. So you could see it as a GIC, right? But a GIC that pays 25%. If you're very confident that AMD is going to be above 30 in 1 year, and you're happy with a 25% return in 1 year, you can place this type of covered call trade. Going 1 year out, you're collecting your $600, or close to $600. You're collecting that upfront. It's a premium that's going to be deposited in your trading account. But in exchange, you can't sell your stock. The stock is stuck, and the max you can sell it at is $30. Even if it goes to 40, the max you can get from your stock is 30, but you pay 24 for it. You bought it at 30, but by selling a premium, you collected $600. So your net debit on the trade is about $2,400 or $24. A year later, you get your money back at 30. You get your stock back at 30, but you already collected the premium upfront, which you can use to buy more stocks or use as income. And then when you get your money back after a year, you put it in another trade. And if you do this with a stock that pays dividends, well, for the whole year that you're holding the stock, you're getting dividends as well. But of course, AMD is a stock with high premiums. That's why you're able to get a 25% return by selling a 1 year call option. Not the other stocks, you wouldn't be able to get 25%. But if you do this monthly, you'll get a higher annualized return, which is what I try to do. Sometimes I even try to do weeklies. Like you saw in my example, if I do it monthly, I can get about 75% per year if I'm able to get 5% every time I do it monthly. Sometimes I'm not able to do it every month. So that's the risk you're taking by doing it monthly or on a shorter period, but it's worth trying in my opinion. All right, looks like Questrade is giving me a hard time, keeps reconnecting. I guess it's after midnight, it goes through maintenance. So I'll end the video here. So basically that's what I did on Friday and Thursday. And on Monday, I'm looking at AMD. I'm also looking at the SPY, either placing another put credit spread on the SPY. I'm also looking at the ETF IWM, which represents the Russell index. I'm also going to look at Facebook for sure, maybe a covered call trade on Facebook by picking a strike that's even lower than the current market price. So to give myself more downside protection. So maybe a covered call on Facebook is most likely what I'm going to do. But for sure, first thing is going to be AMD I'm going to look at. And then maybe if there's enough buying power, it'll be a covered call trade on Facebook. All right, so if you have any questions or suggestions, leave them in the comments section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Also check out the other referral links below. Thanks for watching.